In the event that you have a healthcare coverage plan or you are on the lookout for insurance, you might be feeling a piece of overpower and perhaps be folded by every one of the term being utilized: Copay, deductibles, payment, co-protections, individual, personal, greatest. At the way that large number of these can differ, generally founded on the inclusions or plan, and you have a ton to understand. In this video, we will separate and demystify these fundamentals medical coverage terms, make sense of how the cost works for both you and your insurance agency, and ideally cause you to feel somewhat more sure about how your arrangement functions. So we should get everything rolling. Kind of the view from 10,000 feet is that there are 3 degrees of medical care cost, and the higher your expenses for the year, the higher up you go: level 1, level 2, level 3. On level 1, you pay for everything. At the point when your medical service cost arrive at the specific point, you enter level 2, where you and your insurance agency share the expenses. What's more, in the event that cash you are paying personal it's your arrangement's cap, you enter a level 3, where your production will cover everything further. We'll return again to this towards at the end. It will all have neither rhyme nor reason. Your expenses. Presently, whether your healthcare coverage is given through your boss arrangement through another person's manager plan or an official arrangement like government medical care or Medicaid, they all have a limited sum for charges, deductibles, copay, and co-protection. These are terms that address your personal expenses. In the event that you don't have the focused idea what these figures are for your strategy, contact your insurance agency to demand a duplicate of your strategy. Presently, I simply toss a lot of terms at you. We should characterize these suckers. Insurance premium. Consider your superior like a month-to-month membership charge, similar to your Netflix membership. This is the amount you pay every month to keep your production dynamic. What's more, you pay this regardless of whether you never go to specialist, very much like with Netflix. Regardless of whether you watch anything, you are actually paying your membership. Isn't that so? What is a deductible? Your deductible is the sum determined by your arrangement that you need to pay in a given year before your action pays are done. For instance, assuming your deductible is set at $4,000 and the bill for your visit to the medical was $2,000, you need to cover 100% of the bill cover. In any case, assuming your deductible is set at $4,000 and the clinic bill is $8,000, production would kick into assist with coverage half of the bill. Notice that I said it will help, favoring that later. Fortunately, this is a yearly deductible, implying that whenever you pay that sum toward covered clinic costs, you don't need to pay it again until your arrangement resets. Frequently, this is on January 1st. However, that is not generally the situation. You ought to check with your protection supplier. While looking for medical coverage, it's perfect to search for an arrangement with a low deductibles. Be that as it may, there is obviously a compromise plan that include a low deductible company higher month-to-month charges, while plan with lower month-to-month expenses have high deductibles. So why pick one over the others? All things considered, all that matter is what you expect your utilized will be. On the off chance that you generally go for one, perhaps 2 specialist visits each year, you most likely need a high deductible with low charges. These are frequently allowed to as devastating inclusions plan, since they won't kick in until something truly critical or disastrous occurs. Then again, in the event that you visit the clinic a ton or you have then at the point you most likely need to go with a high expectational low deductible arrangement. In the event that you have a healthcare coverage use history, you can utilize that to assist with figuring out which sort of plan will be best for you. What is a copay? Your copay is a set expenses that you pay for a covered medical core administration. For example, visiting an in-network specialist, a trained professional, or purchasing drugs. Suppose you go to see your PCP who charge $250 for an office visit, yet your protection has a copay of $50 for specialist visit. You pay $50 and your protection gets the rest. Indeed. And on the second, how do Copay work on the off chances that I haven't met any deductibles yet? Since Copay are paying for a protection of clinical costs, doesn't that not kick in until after you hit your deductible? All things considered, confusingly, it relies upon your arrangement. So that is something you truly need to mind. Pre-services. Here is a tip. Your protection will probably have a rundown of precaution care health that they will cover at 100%, no copay, no deductible, no co-protection. These frequently incorporate immunization and many kinds of training. What is coinsurance? Co-protection. Recall when I said that protection could assist with taking care of costs that surpass your deductible. That is where co-protection comes in. Co-protection is a common expense among you and the insurance agency. So contingent upon your arrangement, it might express that after your deductible, you pay 20% and your insurance agency pay 80%. That is called a 80 by 20 arrangement. Presently, for a simplicity of math, suppose you have a 50-50 strategy with a $400 deductible and you just had a $800 emergency room visit. You pay the first $4,000 to meet your deductible, and afterwards the second $4,000 would be divided into equal part importance. You pay $2,000 of that. So for that $8,000 trauma center visit, you be out $6,000. Individual out of pocket maximum. Individual person most extreme how much cash that you pay. This incorporates your copay, specialist visit, specialist visit, co-protection, deductibles, drugs, and the personal most extreme is your arrangement cap on the amount of your possess to actually pay towards your medical care costs. After you hit the greatest 100% is covered by your protections. Family out of pocket max OOP. Family personal most light of what individual yearly personal is, you can presumably figure this one. It's the cap on the clinical expenses for an entire family. Presently, we should bring back the 3-level models all along. Presently, you start in the level 1, paying fundamentally all that on cash on hand, or at least until you arrive at your deductible. And that is where you are parting bases with your insurance agency through co-protection. Assuming your clinical cost that's so high that the composite of what you pay arrive at your yearly personal greatest, you move to even out fee, where generally furthermore medical care costs until the end of the year are 100% covered by your protection plan. At the point when your arrangement reset for the year, you start back towards start. Typically, these acquires on January 1st, yet a few plan contrast on their reset date. Assuming you are actually having an uncreation outlook on what this all method about your monetary obligation regarding your covered administration, your neighborhood medical care office can frequently help you get and comprehend.